50 is the number we're looking for. I mean, like growth versus contraction is the big deal. Now I would look for us to start to get up into like closer to 60, which is where the index was from essentially from its inception until March. Because we know that the industry was growing. I mean, 5-8% per year, even 10, depending on what area you were in. And that's the sort of growth that we really want to see. That's the kind of growth we and even hopefully even a little better than that. Just as from the pure like recovery within months, not from year to year, but I mean, we'd love to have it from year to year, but just going from like live events, for example, places like that had basically the spigot was off, like they're hopefully going to have, more than 100% growth because all of a sudden the spigot turns back on, right? So we're looking for things like 60 and above, like that's ideal. That's the hope. And I think I know we'll get there. I'm hoping it happens soon. But just, pure dividing line contraction versus growth. Like I think don't overthink it. Growth is great. Let's be happy about that. Let's hope that it continues and hope that it gets stronger. But let's keep it simple with the analysis here.
It's kind of like looking at the results of a bill, right? In Washington or Capitol Hill, you got majority and supermajority. And so when we hit that 50%, hey, we've got a majority vote. It's kind of we're in a growth category for our industry. We'd love to see supermajorities because that means that the vast bulk of our industry and providers are actually experiencing the same thing, right? So at that 50, you still got a fair number in some cases that can be in decline still. And I think as the higher we get, the less and less that becomes pervasive. And that's where we were is pretty much without fail. As you looked across our industry, we were seeing growth patterns.